and welcome to the DHL Supply Chain Pricing Power Index Update. I'm here with Andrew Cox. Andrew, what's the latest?
We slipped 5 points this week, back down from 85 to 80, and we're seeing some signs of weakness, some flashing yellow signs across the market. So the one is on the volume side. We've seen volumes decline about 10% after the Thanksgiving holiday. This is typical. We see this in typically every season, although in previous years it's been between the 3 to 5% downturn, but that's because volumes are at such a high base right now that I'm not really concerned by a 10% drop. But then on the rejection side, we've also seen a decline from a peak of about 28.5 on Thanksgiving Day to now we're sitting under 25, the lowest rate that we've seen since the beginning of November. But at the same time, we've also seen rates inch higher this week while we saw tender rejections and volumes fall down. So that's interesting to note. But I do think there's further strain ahead on the markets. I think we might have the possibility for one more leg up, as Zach was saying, one more ramp into the year end as we go into that Christmas holiday.
Definitely. And I mean, one of the things you mentioned is a lot of changes over the last week, and one of the other changes that we had was an increase in jobless claims. How has that impacted some consumer spending trends lately, if at all?
Yeah, it didn't. Well, this most recent week's data is from December 5th. That's the last day of the data, and I didn't see a direct correlation or any change in that data from the jobless claims. But over here on the left, I've just got total card spending year over year. We've seen this kind of ramp up in the last couple of days. That's good. We've seen a lot of volatility over the last couple of weeks. A lot of that is due to Christmas promotions and holiday sales. So it is clouding the outlook. But overall, we're up 5% year over year on the most recent week, and cumulatively over from November 1st to December 5th, we saw holiday sales up 19%. That's robust. The chart on the right here is just showing that consumers are kind of reverting back to some of their spending habits that they had back in March and April, and that's just spending more online and venturing into stores less. So you can see that grocery, department stores, and clothing as a percentage of online sales have all increased. They're not quite at the levels they were back in April and May, but people are spending more online, less in stores, and that's going to put more pressure on the carriers and especially the parcel deliveries. So we pair that with them, more people buying household essentials online. You pair that with the last-minute holiday shoppers like myself, and you've got some strain on the environment.
And so definitely, as you mentioned, this is going to have something to do with increasing freight volumes.
Yeah, of course. So, like I said, we're down 10% year over year, since Thanksgiving. We're up very considerably year over year. I think we're going to see flat-ish volumes moving into the holiday season. We've got a lot of imports, a strong pipeline of imports still coming in off the West Coast, so I think those markets will stay strong. The only caveat here is that post-holiday, post-Christmas, a lot of that freight is going to lose its time sensitivity, especially that retail stuff. So it's not going to have as much pressure on rejections and on rates on the volume side from that stuff coming in after the holiday. But if we take a look at rejections, like I said, we have declined from that 28.5 peak, but we're still above 25, or just at 25%. So 1 in 4 loads, electronically tendered loads across the country, is being rejected. And this is the lowest point since November. But again, I think we're going to see another leg up as more carriers start to bracket their drivers and make sure they don't get too far away from their domicile. We're going to see further pressure up on tender rejections.
A lot of tightening in capacity, and one of the other areas, because of such robust consumer spending, a lot of tightening in warehouses. Where does this kind of look like, moving forward? You said flatten towards the end of the year. Do you think it's going to have any upward momentum going into 2021?
I think so. I think especially on the West Coast, you're going to see increasing warehousing demand. We've already seen that this year with e-commerce and imports exploding on the West Coast. I think you're going to continue to see that into the new year, especially as some of that freight loses its time sensitivity post-holiday season. Just one quick look at the reefer market. It is, again, very tight, almost at 45% tender rejections. So about 4 in every 10 loads are being rejected on the reefer side. I expect that to see some upward pressure as well, especially with the colder months. That makes some goods need to be put on reefers, such as paints and canned goods. So more volumes towards the reefers into the colder months. And lastly, we'll take one last look at the truckstop.com van rate per mile. It's inched up again 2 cents per mile this week. It's kind of inconsequential, that 2 cents move, other than the fact that it's now another year-to-date high, and that it came in a week where we saw tender rejections decline so much. So that's significant. You see that the 2019 tender, the rates peaked about a week prior to now. So we're seeing continual upward pressure, which is not seasonally typical, but I think we see another leg up in rates moving into the holiday, and then thereafter will be anyone's game. I think we're going to continue to see strong volumes and tight capacity, but I think we might peak here before Christmas.
So some upward momentum on the way. Andrew, thank you so much for this update. You're working on some really cool stuff. Where can people find more?
Yeah, you can go to freightwaves.com/communities to get to subscribe to any of our newsletters. We've come out with 3, one focused on the retail supply chain, one on the consumer packaged good, and another on the automotive. I am heading the retail one there, so you can go and sign up for point of sale at freightwaves.com/communities.
Awesome. Love it. Thanks so much for joining us. And thank you so much for tuning in. That's going to do it for this week's edition of the DHL Supply Chain Pricing Update.